Welcome back, everyone. Another installment of Epic Updates.
Epic Updates.
What are we going to talk about today?
I love these car videos.
You know, the car videos are the best.
It works out so well. We are going to talk about something that may be scary for some.
Exciting for others. Not a whole lot.
Mortgage math.
Mortgage math. Yawn. Anyways, reason why I think that's very relevant today is everyone's, upset about where mortgage rates are versus where they were, even up until a couple years ago. But everything's context, you know what I mean? I mean, rates, before, I'm guessing a lot of people were home buyers, weren't upwards of 18%. So when you look at historically where we're at, not horrible. But when you look at where we were previously up until a couple of years ago, obviously, it stings a little bit. But one thing I wanted to kind of touch on was the fact that it's all relative in regards to the big picture. So there was an article that I was reading recently, and they were talking about the fact that the sweet spot for rates for buyers to re-enter the market in a mass fashion would be when they re-enter to 5.5%. Right now they are upper sixes, about low sevens. So I ran it on the higher end, 7 1/8, using the median home price, and then I re-ran it exact same home price at 5.5%. The difference in payment right around $430, which is relatively significant when you look at what you can do with $430. But the reason why the math made sense is for those that are waiting to enter the market, let's say rates a year from now come down and get in that range, which I don't think would be that,
I don't think that would be
that far off, right?
Yeah.
So doing a 12-month average for that, you're talking around $5,000. Median home price, it's right around, close to 1%. So for 1% of the overall purchase price of your home would be the difference in payment that you would have to eat for that year. But then moving forward, you would be able to recapture, do a rate term refinance, and when rates do go back to that level, what are we going to see?
Well, we're going to see the interest rates come down, and you're going to refi, and then your payment's going to come back down to where you probably initially wanted it to be when rates were at 4.5%. Something that you may hear often, and something that Jonas has said to clients and I've said, is you marry the house and date the rate. And it may seem cliche, because having to eat additional hundreds of dollars a month might seem kind of daunting, but at the end of the day, you've been able to secure a property. And I think that a lot of people don't put as much value in that as maybe they should. They get so wrapped up in the couple extra $100 they're going to have to make in payments per month, which it's a big deal. Of course, we all know that.
But in the big picture, not really.
In the big picture, I mean, it really will save you so much hassle down the road when you're having to pay X amount of dollars over list price because interest rates have come back down. So, like Jonas said, it really is. It's all relative.
The other bigger piece that I think people are missing is the fact that it will become a hyper-competitive market, because we saw that previously when the rates came down.
Yes.
And when there was limited inventory. Right now we have extremely limited inventory, actually less than there was before. And at that time it was full-blown bidding wars. It was as-is offers. It was letting the sellers stay for free. So while people want to wait for the rates to get back down where they feel more comfortable, they're going to re-enter the market most likely in a similar environment, which to me doesn't make any sense. So it's a very small cost insurance policy to ensure that you can find the home that you want and not get caught up, or worse yet, get in a position where you're now bid out of the market. So you waited to enter the market, at which time you're now no longer a candidate in the market.
You're exactly right. And if you're someone that is not coming in paying cash, or has just an influx of money to be able to throw at these properties when they inevitably get overbid, this is a great time for you to be able to have an inspection, have an appraisal, maybe get seller concessions.
Yep, exactly.
Like when it was 3%, if you didn't have any extra money to go up over list price, you were waiving some really critical things that, I mean, we would never advise you to waive an inspection, but some people had to do that in order to stay competitive.
Exactly.
And it's bananas. We're not like that right now, so it really is kind of a blessing in disguise.
Yeah. So anyways, just wanted to put everything in context for everyone, and hopefully there's some value here. And we hear from you guys, and looking forward to re-entering the market.
Yeah, absolutely. And if you find a property that we've sent to you, or you found on the dreaded Zillow, you can send it to us, and we can run payment assumptions for you based on what current interest rates are, and then what interest rates will be. So if you want us to run some projections for you, just let us know.